The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 13th terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I am absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 124 points, trading at 26,123. S&P's up 14. NASDAQ 100 up 77 points. That's a little over 1%. 75.64 is the print. Russell's up a little over a point. Semi's up 28. That's 2% to the upside. Trannies are back 46 points out there. Spot volatility index is well below its 50-day exponential moving average. She's trading at 12.49. Gold's back $3. Silver down 4 pennies. Light sweet crude up $1.72. Leading the charge here to the upside dollar-wise. Booking holdings up $15. Tilray Inc. up 13. You've got Mercado Libre. Oh, I love saying that name. Up 9. Buckaroonies. Azimil Holdings up 8. To the downside is ICU. Yeah, the ICU, they are in intensive care, down $16 or 5%. Lending Tree is off 8. WageWorks down 8. Pivotal Software, not too pivotal today, down 21%. That's nearly $6 to the downside. And Red Hat, it's been a long time since I've seen that appear on my chart. Not in a good way. RHT is the ticker symbol, down nearly 4% or 6 buckaroonies. Of course, I want to look at what you want to look at. And that means we go really to our first questions. It was going to be a Larry day, meaning we got a question from Larry and then Larry C. after that, 2 different Larrys. But Aaron went ahead and followed up, and so it's not just a Larry day. But I want it to be all about you. But let's first go to Larry's question. Both Larrys actually kind of tie in together. So let me read their questions to you, and then we'll try to answer them as best we can. So Larry writes in, and he sent me a link to an article, which, Larry, I did not get a chance to read. But in essence, the question was, as if he understands the article and he's looking for my commentary, but he put weak CPI is bullish for gold, question mark. I never thought of that. He said, I always thought inflation, here's the key, inflation is the weakening currency purchasing power leading to inflation of price of goods and gold and so forth. So what Larry is saying is that a weak, if I'm understanding your sentence correctly, is that you believe a weak currency or a weak U.S. dollar would then equate to inflation, if I get that correct. Now, the question I pose to you is, what do you think causes inflation? Right? Because the normal thought process, and I'm not referring just to Larry, I'm referring to you, all of the you Utes out there. What do you think causes inflation? Do you think that it is just the printing of money? Well, let's come back to that because Larry C. writes, good afternoon, Steve. Could you please look at Bitcoin, the Bitcoin ETF, GBTC, in today's show? I want your opinion on adding here at these levels. It looks like it just had a trough G. We'll see if we can figure that out in the daily chart. And also looks like it's showing support based on a retracement level. And if you could also show the weekly and monthly TAS level. So we'll do that. And I am a long-term investor. So with regard to currency out here, what we know about Larry C. is he believes, well, we don't know if he believes Bitcoin is a currency or not, all right? But he has confidence in Bitcoin. Confidence being the key word out there. Confidence. Does confidence impact inflation? Well, I don't know. Why don't we go talk to the folks in Turkey? If I had a number and we could call people over there, I would say that the lack of confidence in their government, the lack of confidence in their currency is certainly why they are seeing inflation, right, in their assets out there, because people don't want that currency. Maybe it's a little different if a currency is weakening versus I don't want anything to do with it, so to speak. You know, I personally witnessed inflation at those type of levels once before. It was during my first trip to St. Petersburg, Russia. Beautiful city, gorgeous city. It is the most beautiful, at that stage, filthiest city I'd ever seen in my entire life because it wasn't maintained, but just simply a gorgeous place. So I was over there in around the July, early 90s time frame, which was cool because that's when they have their white nights out there, meaning it really only gets dusk for a few hours. And I wanted to stay, and I did stay, at an authentic, high-end Russian hotel. Now, I was paying, luckily, in U.S. dollars and, you know, by a credit card, but each day slid underneath my door was the new rate for the hotel if you were paying in rubles. I saw on a daily basis, it wasn't like, hey, it's going to cost you 5 more rubles. I wish now, to this day, that I kept those papers. It was every single day. When I went to the black market, and it was illegal, other than an American citizen or a foreigner, I suppose, to have U.S. dollars over there, it was illegal if you were a Russian citizen to have U.S. dollars. Yet when you went to the black market and they saw this ugly mug, what they wanted U.S. dollars more than anything. They were willing to give up their goods. You want to talk about inflation? What do you need in order to take what I've got for your U.S. dollars? That's inflation. Inflation is not just one thing. I guess that's really the message that I'd like to be able to provide to you, Larry, or both Larrys. Inflation is not just one thing. Inflation can have to do with debt, can't it? Think about this, right? Many people think all the printing of money, we were going to see gold just simply skyrocket, right? So we know that the Fed increased its balance sheet by $4 trillion or so. But what we also know with regard to the banks, if we take a look at the excess reserves, this is from our Fred St. Louis Federal Reserve Bank out here, we know that more than half of that money never made it out into the market. It just simply was parked inside of the banks. Here are the excess reserves. Now think about inflation like this, right? If the bank is lending you money, right, based on the full faith and credit you're going to pay it back, let's say you don't have it at that stage, you're going to go buy a home. Let's say the most typical thing to be borrowing money for is to go buy a home. Whether the money supply is growing or not, or whatever the U.S. dollar is doing or not, that could create inflation, more people buying homes, can't it? And for most people, isn't their home their bank? Inflation, not caused by one thing, Larry. Well, let's go take a look at Goldilocks when we get back to this break out here. And Bitcoin. Steve Rhodes with TFNN. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, this happens to be the chart of the U.S. dollar index, and the point that I just simply wanted to make is that let's not fall for the fallacy that inflation is caused by just one thing. There are multiple things that cause inflation out there, and so don't think just simply the printing of money is what's going to go ahead and make gold and silver and other commodities, whatever it is, go through the roof. Nothing could be further from the truth, and you and I, we can just simply discount that by just looking at how things actually work inside of the marketplace. Now, with regard to the question of taking a look at Bitcoin for Larry C., he really wanted to take a look at our 3 time frame charts out here: daily, weekly, and monthly time frame charts. And because for whatever reason out here, Larry C., the monthly charts aren't providing you with TAS market profiles that are worth a hill of beans. The weekly, those look okay, and prices trading below the bottom of the weekly. You'll see that the bottom of the weekly is 909. That's a center panel on our chart. Center line is 982 and 1091 is the top. And inside the daily time frame, what we're taking a look at is prices trading below the bottom of its box too. So if you're asking me, is there some type of signal on GBTC with regard to profiles, because you were looking for those profile levels? The answer there is no, I don't see that. Now, you mentioned a potential trough G. So let's try and go figure this out and see what type of count. Now, trough G would be letter or numeral 7 out here, and you're absolutely right about that. And that is that a couple of days ago, we saw that GBTC got down to a 7th wave move. Where is my, there we go, my crosshair. Whoa, crosshair won't come on. Oh, that's really weird. You know, I'm having some trouble here with this system. That's really weird. What a bummer. Yeah, I'm going to have to reboot everything. But I won't reboot right now. I have to do it after the show. But so Yes, did it make a seventh wave move? It did. Is price trading over Stevie's red line right now? Yes, it is. That's at 840. You've got a gap to the upside yesterday, a bullish engulfing candle. So it at least certainly says, and I know you're a long-term investor, and you were asking, where can you add from a long-term holding standpoint, I believe. If you're looking for a bounce or a counter-trend move, well, then you have it, and I would have to say that 935, the bottom of its daily box, really becomes your resistance target area out here. But if we take a look at GBTC on a longer term chart, what would that be? That would be this chart here. This would be a monthly chart, GBTC. I don't see anything on the monthly chart that says the move is over. It looks to me more like what this wants to do. Bitcoin Trust has come all the way back into what looks like about the May timeframe at around $1.50 or at 862 right now. So is Bitcoin the new currency of the future? Nah, not at all. Not at all. Come on, how much confidence do you think across the board out here folks have in Bitcoin? When was the last time? For me, not a chance that Bitcoin is the future of currency out there. Maybe it's some kind of digital form, but it is not all of this stuff that is out there. It just isn't. You really need to give me some real proof out there that that it's the savior, that it's the one. But from a trading standpoint, we'll just go back to that, Larry C. Yes, it did make a seventh wave move. 935 probably should be the extent of any counter trend rally inside of a GBTC. Now, Aaron wanted to take a look at 3M, so let's go take a look at it. MMM is the ticker symbol. MMM, and I'm just giving you my opinion, certainly with regard to digital currencies and Bitcoin and all that stuff out there. So yeah, I don't know what that's actually worth. But if we take a look at 3M, well, I'm also giving you my opinion, but we're taking a look at some very specific levels that Aaron is looking for. He says, I know you're expecting the Dow to break its consolidation to the upside. I'm anticipating that it is going to. You're absolutely right. And when it does, then it's off to the races, which will feed into our next question that came in from the Tiger's Den. But that's neither here nor there. You say, could I get your thoughts on entry into 3M from a long-term hold standpoint? Well, from a long-term standpoint, first, one of the things I think you'd like to see inside the Dow is for it to break through that consolidation. So one of those things you want to look at, Aaron, I don't have the chart up on my screen, is the December highs inside of the Dow. I think that is the key level. Consolidations can go on for a long time. Consolidations, we're outside of the consolidation zone inside of the S&P and the inside of the NASDAQ. Well, the NASDAQ's got it inside of a longer-term consolidation. Don't forget, that's targeting 8,800 and well above that longer term. But with regard to 3M specifically, one thing we know on the daily time frame out here is that what price did was it moved back to a level of resistance that actually held. That was the gap to the downside. Gaps are our friends, these open windows out here. In the case of 3M, it gapped to the downside with decent volume, 11.6 million shares, it looks like, back on the trading day of April 24th. Now, the top of that gap, I'm defining the top of the gap as the low from April 23rd, 214.75. Was identified resistance. We didn't know if it was going to be real or not until price got up there and actually tested it a few days ago, September 10th. Now, it formed a shooting star candle, the opposite of a hammer. This takes place as price is moving higher. It's a very bearish candlestick, just like a hammer is a very bullish candlestick. So up at resistance, you had the bears actually show up. Now, what took place yesterday inside of 3M is you tested that level. That level, again, the 214.75. And in one day, you decided to just simply sell off, close below the bottom of its profile out there. The bottom of the profile being 209.15. So this says to me, what I would be looking for, Aaron, is watch to see if price gets back to July 24th. There you've got a high volume low, 8.1 million shares. Maybe it's 202.19. Maybe it's 190.57. We won't know till we see if there's a test or rejection of that level. So from a longer term standpoint, looking at the daily time frame charts, that's what I would be looking at out here. On a monthly basis, looks like this thing wants to trade anywhere between 197 and 245. So look to buy it on a retracement as we speak just at this moment, and that is ticker symbol 3M. Now, how do we kind of groove and move from here into the question. We do have a question about palladium too. I don't recall which question came in first. Let me do palladium because we got about a minute here, and then I can focus more time without commercial interruption on the longer term move for the Dow. That was the question there. So if we take a look at palladium, or this is gold. Hey, by the way, gold, all it's doing is trading in between. I say all, it's in a consolidation between 1192 and 1214 out there. So that's what it is doing. But let's take a look at palladium. Let's look at the December contract. And with regard to market profiles out here, I'm going to focus just simply on the daily time frame. The daily time frame shows that you've got resistance at 975.90. Now, breaking above that, closing above that, I should say, says that you now have a breakout. To go where, I just look at the previous swing point on a weekly time frame. That's around 1,017, give or take out here. But you have not broken through resistance. This would not be the time to enter a long position. You want to do it around support. Support inside of palladium would either be the bottom of the box, 935.80, or the center of the box around 951.80. That would be your price area, and taking a look at the daily time frame. Is there anything else when I look at the December contract for palladium that gives me any other information? And the answer is no, not really out there. We can see on an hourly basis fairly large consolidation out there. So Ruby, if that was for you, sweet Ruby Tuesday. It's Thursday though. That's what I see when we look at palladium. We come back from this break. We're going to go take a look at the Dow, answer the question, I suppose, which is, well, we'll answer the question, and I'll read the question to you. We'll get back from this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the question goes like this. Steve, on Tuesday, September 11th, you showed your long-term Dow Jones Industrials charts, making the point that the setup is bullish, that the January-February decline was just a correction. Yep, absolute correction. Please restate why July was significant as I see it. Thanks, Mr. Zeester. So let's start here, folks, and this is really important. I think the long-term, getting our heads wrapped around the long term is so much more important than taking a look at what's going on a daily basis out there. Because if we can do this, this is where you and I can really capitalize on what's going on in the market. I think this is especially true as CNBC parades guest after guest after guest after guest that talks about what inning are we in. What Stevie's telling you is this is a doubleheader. Forget about the inning. And the second game hasn't even started, or maybe it just did. You go ahead and use whatever metaphor you want out here. The reality is sometimes, look, you and I can go back. We can be masters at being able to determine what took place on a chart on the left-hand side of where price is at today. What we really want to be able to do is try to figure out how do we take that information and go ahead and apply it to the future. So how do we do that? We have to go back and we have to be a student of history. We have to try to understand these chart patterns that you and I spend so much time on each day. And when we take a look at the Dow Jones Industrial Average chart, our historical chart that goes back into the 1920s, goes back into the 1880s, but right now we're just taking a look at the 1929 top. The blue line, by the way, this chart here is referred to as a logarithmic chart. They're very helpful, especially when taking a look at long-term data. And you have to say, going back, what was the importance of the 1929 high, right? What was the importance of that from a charting standpoint, from a technologist standpoint, from a fundamental standpoint? Well, I'll tell you what it was. Because if we put the Dow on a logarithmic scale chart, take a look at the 1929 high, and then the next high that came in, which was in 1965, what you and I will see is that the 1987 crash was not the beginning of the end. It was the beginning of the beginning. It was the beginning of the second game, the double header. Now, you and I didn't know that at the time, but we do know that now. And we can take that same exact trend line, by the way, and we just move it up here to the 2000 high and the 2007 high. And what we see is that a new phase in price began just as it did. This was back, by the way, in 2016, just as it did with that 1987 crash, until price in the Dow closes below that blue diagonal line out there. And we'll go show you where that's at. A new phase in price began. I know there's people that are going to say, look at that percentage move in fair value BS, before Steve shared this information with you, okay, that the percentage move, it's just too much. We've come too far too fast, or whatever it is that they want to say out there. Look, from the low in 1975 to the high in 1987, it was a 379% move. And then you just had a correction coming back to a trend line. That's all that it was. It doesn't matter whether it's 10%, 50%, 20%. It's just price coming back to prove itself that the old trend is done with and over, and a new game has just begun. By the way, the move off of the 2009 low to about where we're at today is about 311%, 20%, somewhere right around there, not 379%, even less than what we saw back then. So here, if we go and take that chart and we just draw our lines more to where we're at currently inside the Dow, well, there's another trend line that you and I can put down there. Because 1985, the low that was there, if we draw a trend line and use the top of the 1987 level, and we just use a regular linear scale, which right now we have a linear scale on our chart, what you and I are going to find is that when price breaks above a trend line, as the Dow did back in December and January of 2000, well, December of 2017 and January 2018, what took place was the pullback, the more than a 10% correction, just a correction, came back to where? That trend line. What we saw that took place for a series of months was nothing more than a test and rejection of a very important trend line. The type of trend line that says the game has just begun. The next plateau or move to higher price inside the Dow is just getting underway. Not until we see price get below that trend line will this conclusion, this thesis, this reality say that the conclusion is wrong. And really, the reality is price would have to get below the blue diagonal line. That's that exact same logarithmic scale. I thought that's where we were going to see price fall back to before we went to that next level. But that is not the case. And I had to go back and ask and find the reason why. What was the importance of this most recent decline out here? And the reason why I had to understand that is because you and I know that when we take a look at the global flow of capital, which it really is all about, because if you're wanting to understand why our price is moving higher, whether you want to call it inflation or something else, it is where is the money flowing? Why is it chasing what it's chasing? That's the real question out there. And what you and I know is inside the U.S. stock market is that we've got, I'm just trying to get to a chart out here. Inside the U.S. stock market, we've got money from around the globe flowing in. Traders in major currencies, major reserve-style currencies out there, the euro, the yen, the pound sterling. Bitcoin's not a reserve currency out there. But we take a look at the major currencies out here, we see the markets that are just simply breaking to new ground on screens out here. Now, this is a daily time frame chart here for the Dow equity futures contracts, okay, which, by the way, made a new all-time high in yen today. That tells you the market is not over. That's not the way that markets end, when they do end. Plus, you and I know the pattern that's present inside the Dow before the beginning of every bear market. Now, back to that other chart out here. I'm not saying there's not going to be corrections. I am not saying that. On average, over the last century, we see a correction every year. We see bear markets, for the most part, every 5 years. So we're still going to have bear markets. When I say bear markets, I'm referring to the percentage. Look, the reality is, when Larry Pesavento taught me about Fibonacci retracements out there and said it's normal to have a 61% retracement out there, I had to sit there and think for a while. What do you mean? A bear market is something, or we term one, as a 20% correction. And yet I was looking at charts saying, come back 61%. It almost didn't make any sense, did it? The Dow itself has moved on to, and that's why I say, so why did I say July? I don't know that I answered that question out here. So I should answer that question. Let me see if I can find that chart again. It's probably right here. Why was July so important? July was important because that was the clear break. July of 2018, this wide-ranging bar as price moved off of that trend line. And now the key is going to be 26,616. As Aaron was asking about 3M, I say, to hold off right now, especially because it closed below on a daily basis market profiles. I would have a different take, perhaps a different take, if we see the Dow close above 26,616. We're in this little consolidation out here right now, and if price closes over that, then the signal that we just saw here, and I know people are saying, how in the Sam, you know what, can you say that we just had a major bottom in the market? Folks, a scotoma is when things are in front of you and you just don't see it. And I don't want you or me or anybody else to have a scotoma. These markets are heading higher. This is the only game in town. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So, this chart here just really sums it up and tells it all. And that is with regard to taking a look at weekly time frame charts, the upper left-hand corner. That's the Dow. That's the only thing that has broken a trend line. It's moving higher, so you can see that cash is pouring in here. If we take, this is just simply in U.S. dollars that we're taking a look at it. If we take a look at India, that also broke out, so there's a possibility that that's a place to look if you're looking for where to put your foreign equity money. And there's others out there. Emerging markets, are you kidding me? Counter trend rally up to the trend line, sure, that's the lower right-hand chart, but don't get burned. U.S. dollar indexes, the dollars is just like when I was in Russia and in that black market, and people would give anything, sell you anything to trade their Chotsky, their product, for a U.S. dollar. Anything. They just simply, why? Because there was no confidence inside of the ruble at that point in time. It is confidence, and it is about confidence in the markets. And when you see where the money's flowing, it just tells you that you've got confidence. Now, John in Sarasota, you sent me an email asking me about ASHA, and I don't have a ticker. I think that might be the wrong ticker symbol. Would you be kind enough to send me another email, and then we'll go take a look at it? James J. wants to go take a look at, I believe wants to take a look at Intel. So let's go back there and take a look at our 3 time frame charts out here, INTC. We looked at it yesterday, and the question was, you said, Steve, thanks for taking my question. Yesterday, I heard you say that Intel was completing A to B equals CD to the downside, but not to buy until you see a sign of strength out there, INTC. And is today that day? Well, it is. Here's the... So let's take a look at Intel. First, let me show you the A to B equals CD pattern. So when you see this pattern out here, what you like to see is some type of confirmation. That confirmation is typically going to be a bullish reversal candle. What we can see today is Intel thus far had a gap to the upside, a little bit of a window. That means a separation between the low of today and the high of yesterday. That is a gaps are your friend. Don't get too sucked up into gaps get tested. Gaps are your friend. It's a sign of a breakout. Now, light volume, about 11 million shares today, but nonetheless, that is a bullish reversal candle. What's the second thing that's needed out here? It depends on what your time frame is from that trade, James. Price has not gotten inside its TAS daily profile. So resistance could be 46.49. Old support, which was 46.49, could be old or new resistance out there. The other thing, when we take a look at Intel on a daily basis, it hasn't gotten above Stevie's red line. That's 45.94. We had price moving lower, doing less relative energy. The key is, I would say, if you're going to go into Intel, just know that you've got some resistance up top. 45.94, 46.50 doesn't mean it can't take it out. And you have to have a stop below yesterday's low. So just use that in trying to determine your position size out there. And that's how I would take a look at Intel. But to answer your question, is today the day of that bullish message? It is. But you do have some resistance just overhead. So, James, best of luck with that. Robert writes in, RH. Hi, Steve. On a longer term, for longer-term investments, do you use the same risk management rules on shorter-term trades? The answer there would be yes, but I would do it like this. This is a daily chart for Intel. I'm just going to switch this to a monthly chart. The daily time frame chart shows you with an 89-cent average true range. When we change, that's the bottom panel of my screen out there. That's the last 10 days. What's the average range over the last 10 months out here? It's $5.38. So do I use the same tactics, the same stop, the same position size? And the answer is yes. I just want you to stay within your chart time frame, whether it's a monthly time frame chart, which, by the way, in the case of Intel, price got down to very close to the bottom of its box, 43.60. The actual low had been 44.06 out there. If we take a look at the weekly time frame, what we'd look at is an average true range of 262. The weekly shows that price is also not back inside its range, meaning above the top of its box out there. But to answer your question, RH, and it's a great question, I do use the exact same tools and techniques, position sizing. It is all about position sizing. It's one thing to be able to identify the pattern and say, okay, I'm just going to wait, as Stevie says, for price to get a bullish type of reversal candle, whether it's a rising window, a gap to the upside, or maybe you're going to use my red line, maybe you're going to use the TAS market profiles. But when you do, you're going to take a look and stay inside that time frame. For example, on a daily time frame, it's 89 cents is the average true range. What do you do with that 89 cents? You multiply it times a Fibonacci expansion. In volatile markets, you would use an expansion like 1.618. In quiet markets, you use a smaller Fibonacci expansion. It's just the opposite of what most people think. I watch people time and time again say, I'm going to put in a tight stop because the markets are so volatile. If you stop to really analyze that, you'd say, man, that's crazy. Volatile means you can have wide price swings out there. You don't want to be right on the trade, wrong on the stop out there. A wider stop means you have fewer shares from a position sizing standpoint. It's all about position sizing. Mike L. writes in, he says, it looks like GDX made a morning star on the daily chart out there, GDX being the Gold Vector Miners ETF. Do you think it's a good time to buy? Today's candle looks weak out here. So you're absolutely right about the morning star. Let's go show folks the morning star out here. So nice going, Mike L. And in the case of this morning star, what we can see about the GDX is not only is it pulling back today, it ran into resistance being the top of its TAS profile, 1837. So you're asking, is this a good time to buy? It's a really tough question. First, I'm still long the mining sector. 2 ETFs out there. The GDX was stopped out right to the penny. I mean, right to the penny out there. But hey, so be it. You take your medicine and you move on to the next trade. That's what position sizing is all about. The issue that we have inside of the GDX is we know about the directional correlation between gold and the mining sector. And so that says, well, what the heck is gold doing? And gold out here, we take a look at it. Well, I've got to get to the gold chart. This is palladium again. Let's go back to Goldilocks out here. And, you know, gold is stuck in a consolidation of its own. Mike, the consolidation, the top is 1214.50. It looked like today was going to be the day of a confirmation of breaking above resistance, and it was maybe off to the races for gold. I feel, and so is now the time to buy? When it's pulled back, I'd say the time to buy, if you want to pull the trigger right now, is maybe if you can't bust them to the upside, maybe it's going to bust them to the downside. What that means, and I owe Tom O'Brien 50 cents, I think, for that royalty of using that terminology, is wait for price to see if it tests the bottom of that box at 1192.60 out there. That's how I would do it if I was not inside the trade just yet. I would also buy it on a breakout. If price broke above, closed above, not broke above, closed above $12,1450, the top of that daily profile out there. Now, gold's got some other problems, some other issues that it needs to contend with. What are those issues? I'm glad you asked. Well, it is really that simple. The most simplest, most fundamental, technical thing that I've learned of all the tools that I've learned out here is that Jerry Maguire, show me the money. And this chart here shows you the money, because we take a look at gold price in dollars, we take a look at it in euros, we take a look at it in yen, and we take a look at it in Great British pounds. And the Brits right now are saying, not so fast. Take a look at what gold is doing in Great British pounds. It's going to be very hard, if not impossible, for gold to get its wheels on if it's moving lower in pounds. Why? Because in dollars you're buying and in pounds they're selling. There's a natural buyer and seller out there. It's got to be moving the same direction in all the major currencies out here. And it's just not just yet. So Mike, L, just stay tight and stay tuned.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So what John in Sarasota did right back, it was ticker symbol ASNA, Ascena Retail Group. And I forget the question, but basically you were wondering what's going on with the stock and what to be looking at. What I would be watching today, John, is that right now price is testing the prior swing point. That swing point is the trading session from August 29th. Now, that August 29th session also happens to be a hammer candle. And as we take a look at the hammer candle, says to us or communicates to us that the market is trying to hammer out a bottom. That's in essence its meaning out here. We see that as price started to move higher to sideways. I was trying to combine the two, just to create a new adjective out there. But in this case here, we can see that the bottom of that profile, so it kind of goes back to gold and some of the other stocks that we looked at earlier, how important it would be for price to be able to regain and get back inside that box. In essence, with the exception of one trading day, which was September 4th, that has been resistance. It was resistance yesterday, 461. So we're right now in between like resistance, 461, and support, 424. A close below 424 is going to set up an A to B equals CD to the downside. The one-to-one price projection, should that occur out here, John, would get you to a price level about 367, which could set up a Gartley buy pattern. So 367, 338. I'm not saying that's going to happen. I'm saying if you're long and you get a close below a hammer candle, the rhyme is if you're long, you're wrong. So I wouldn't, if you're looking to get into it, if you're already in it, I don't know what the time frame is out there, and so it's hard for me. But with regard to what it's doing right now, it's really trying to buzz. And volume-wise today is about 968,000 versus what it's going into was about 1.5 million shares. So it's lighter-ish volume, but I would stay put. And I would be looking to see if it can break through that. And then you'll be looking for that A to B equals CD to the downside, just like we took a look at inside of Intel. So, folks, thanks so much for being here, for putting up with Stevie's long-term forecast. But of everything we talked about today or could ever talk about, especially because of the parade of characters that come on the boob tube out there, the market is not in its seventh inning. It just began the next game of its doubleheader. Did that in July. Prices are headed higher for a long time to come. We'll be right back. No, I won't. I'll be back tomorrow. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.